Serial founding means relearning, not repeating. So imagine you have yourself founded a European unicorn, a phenomenon in Europe, and then you have to start, and you want to start all over again. How is that done? What have you learned, and what have you learned that you better unlearn for your next company? So I cannot think of a better person who you probably have unlearned and relearned a lot during 20 years of HTGF. So please put your hands together for Alex from Frankenberg and then Michael Cassau. I hope I said that correct. Cassau. Put your hands together. How do I say that correctly? Cassau. There you go.
So yeah, let's have a seat. It's a great pleasure and honor, Michael, that you are on stage. I think you have a really, really interesting story to tell. I'm Alex. I was managing director of the High-Tech Gründer Fonds for 20 years. I wrote a book. I don't have it here. You can buy it on Amazon. Bitcoin, the Honest Money. It's going to be published in English in the US in April. And I'm doing a little bit of investing and supporting the ecosystem. And Michael, I think you are a really, really great person. You picked the most difficult challenges. When I looked at your CV, starting with your studies, and what you did after that. So who are you and what describes you best?
Thanks, Alex. Great to be here. Yeah, I'm Michael, and yeah, you probably read a bit about what I did before. So I founded Grover before, the tech subscription company where you can rent instead of buy all the tech that you need. Financing is pretty long-term typically, but your usage times for consumer electronics usually is a lot shorter. So there was a big need in the market, and consumers really loved it. And today we're, applying a similar logic to, I would say, to the most important industry, which is transportation. So road trade today is a heavy emitter of emissions. It's all diesel, and it's time to electrify it. So that's NexDash, and happy to talk all about that.
So that's going to be really interesting. But very quickly, you studied economics, and parallel to your PhD in economics, you did the first Staatsexamen in law. I mean, that's not really connected, and it's very difficult to do a PhD and then first start. Why did you do that?
Yeah, I don't know. So I was an entrepreneur before studying, and then I started studying when I was 21, and I thought, wow, I'm way too late. And if I'm 25, I only finished with 1 degree. This looks really stupid, so I have to do 2. No, but all jokes aside, I couldn't decide really whether to do law or economics. I loved both, and I thought law was really easy always. I mean, essentially it's all in the books, and economics was really interesting always. So I don't know, it came naturally. I really loved this, and I think there are a lot of touch points. They even at some American universities, I think even Bayreuth, there's a combination of the two. It's called law and economics. Yeah. So you can really go deep into both of these fields. There's a lot of points that touch if you really think about it. It's all about incentives also.
And then your first job was, I think it's the most difficult job to get. It's even more difficult than getting a job with McKinsey. You worked for Goldman Sachs. I mean, just very briefly, what did you learn? I mean, what did you take away from the #1 investment bank in the world?
Well, first of all, I loved it. I think Goldman is the most nerdy investment bank. So all of the people there were really also well educated. Some of them studied English or whatever. Everybody was really nerdy. So the learning culture was really high. Everybody, I mean, it wasn't important how you came in. It was important that you learned really fast. So this is what I liked. Yeah, I guess. Look, I think it's important to work really hard. This is what I learned, that it doesn't matter what the times are. But I was used to that. I guess I learned a lot of precision. No mistakes when you go to the client, this and that, and just having a very high demand on yourself, your team. So I really enjoyed the time.
I think the first thing that you learn at Goldman Sachs is that you can work with Excel without using the mouse, all the shortcuts.
Yeah, and you need to get rid of the F1 thingy on the keyboard.
I can do that with Outlook, by the way, not with Excel. So you mentioned the work hours, and the stories go that you more or less work around the clock. So the question really is, comparing your workload, Goldman Sachs and Grover, where did you work more?
Well, I think when you're an entrepreneur, you're completely consumed. in the work. There's nothing else to do. But if you're somewhere and a friend visits you for your birthday, you can actually see them. So at Goldman, it's a little different. You're not completely, thinking about every deal all the time, potentially. But if somebody visits you for your birthday, you may not have the time to meet them, which is, essentially what's happening. So I think it's a different time of, work or consumption, but entrepreneurship is definitely all-consuming. Like you dream about it, you wake up with it, you're just all there. It's both, a lot of work.
From your experience at Grover, what do you think are the key success factors to get us, and also the current company, what are the key success factors? How do you get the company off the ground to a success? Is it luck? What is it?
Yeah, I think the key at Grover was finding product market fit, which only came, I would say, almost 3 years into the journey. So we did a product market fit survey, actually, like how disappointed would you be if the service no longer existed? And it turned out that most of our brand positioning until then was, addressing people who really didn't care about us. It was like try before you buy. It was really low PMF. But there was a subgroup of people who used Grover for instead of financing. And they had instead of buying, they had a really high product market fit. So we adjusted our service essentially to them. And that was I would say that the birth point of the success of the company.
So until you have product market fit, should you be very careful with the money spending, like low burn rate or medium burn rate or high burn rate? How would you advise founders today?
Yeah, unless you have product market fit, like real good retention and user acquisition costs that are relatively low, and people who would suffer if your service no longer existed, you probably shouldn't spend much money. You should spend money to find out your product market fit. That's it, right? But not on marketing, because if user churn, they churn. You don't, acquire the same user twice, essentially. Product market fit is the most important part.
Yeah, I think it's a very important point, because that's what we see very often, that at sometimes there's too much money, in the bank, or the venture capitalists give you too much money, and then if you spend it carelessly, it doesn't have the impact it should have, and then it gets really difficult. So you left Grover, you founded a new company. What are the three things that you took from the Grover experience that motivated you to not go back to Goldman Sachs or to consulting or Deutsche Telekom, but to continue to be an entrepreneur? Because it's tough, as you mentioned, all work around the clock.
Yeah, well, one of the questions I was asking myself soon enough in the Grover journey was, what would happen if I put these high-performing individuals, head of growth this, VP marketing that, into the SMB companies in Germany or the US, right? They're typically profitable, have product market fit, but they have no growth. They're rarely growing. So what would happen if you just exchange the leadership in a way? Not the owner, but you just approach these companies with a different mentality. So that was a starting point for my excursion into the SMB space, right? So I started looking at various SMB companies. And what I realized for me is that even if you think about applying AI to SMBs and all of that, the end game needs to really click and make sense. You have to have a really end game vision for the company. And if you're looking at, construction companies, then what's the end game? Well, it's a big construction company potentially. And that's how I came across the logistics space. So I was really surprised to find out that they are, super fragmented. Like 95% of carriers with trucks actually have only 10 trucks. It's all diesel. There's a capital gap. They cannot, finance the transition to EVs. They're consumers of the existing charging infrastructure. They typically do not build software to route them and all of these things. And so I thought, okay, well, why don't we take the Grover approach, if you will, right? High growth, high tech, doing the startup way to that particular industry, and just, run it like a tech company, essentially. And that's the birth story of NexDash.
So NexDash essentially is a startup, but you rely on existing companies that you acquire or partner with. You acquire them.
Yeah, correct. So that's another insight where I thought if you look at private equity, essentially many PE professionals have never seen a business from the inside, and even less a startup from the inside. So they don't know what is high growth, what is how do you do all of that thing. So I call it Wave 3 PE, essentially, where you apply high growth to a platform that you acquire. So that's our go-to-market. The go-to-market for NexDash is M&A. We buy carriers. We then retire their diesel trucks. We introduce EV trucks. And then subsequently, with the existing platform, we produce high growth with sales and more activities and all of these different things. But the M&A part is the go-to-market. It can be more M&A later, but essentially it's a platform built where you apply the tech startup growth mindset and the technical ability to the companies that you acquire, and then you build them out.
I see a pattern repeating. You're picking again one of the very difficult challenges in the market: EV trucks. I mean, even Elon Musk hasn't really succeeded launching an EV truck. There's no charging infrastructure or limited charging infrastructure. There's the diesel mindset maybe with the truckers. So how do you do that? I mean, are there EV trucks that can be a truck and not recharge after 200 kilometers?
Yeah, so I think there are two things. So first of all, on the truck quality, actually our German manufacturers are great. So thumbs up, like phenomenal trucks from Daimler or MAN, many others. Like we don't know about the Tesla Semi. We have never seen it on the road because we're not in the US yet. But the German trucks are great. They have a great range. And it's time that we put them on the street to drive, right? So that's the first thing. And regarding the challenges, I think you got to wake up in the morning and be excited, like every day, and you learn every day. Like everybody in my team is learning every day, even though the senior leadership team is from Grover, actually. So the chief commercial officer came from Grover, our VP sales is from Grover. So all the best people from Grover are now at NexDash, building this new, this new kind of big hairy thing. And it has to be, I think, complicated and hairy to be exciting.
So are there trucks that have EV trucks that have a trucking distance? Like, I don't know.
Yeah, totally. So that was the biggest insight, I guess, or one of the insights is that these companies are actually smart. So they have research teams and they have a history of selling diesel trucks, meaning they know exactly what range do you need to put to the market in order to cover a certain percentage of the usual range or usual distances that are being driven. So both Daimler and MAN have trucks that have a range of 600 kilometers, and this covers about 98% of German traffic. Yeah.
So do you find enough charging stations?
So that's the second thing, right? So there are charging stations for trucks specifically, and you need to have partnerships. You need to make sure that your charging cost is low and lower than whatever is public. But the thing is also that when you have 10 trucks that charge at a particular place, or 20 or 100 or whatever it is, the number that is greater than one, or occasionally, you can go to a financing provider. You can say, well, build me a charging station here in this greenfield, like in the desert. I promise you I'm going to charge every day 100 trucks there. And then it's just a financial allocation play suddenly, right? Because suddenly there are incentives and charging location build-out becomes like a data center build-out. So one of the reasons the charging locations aren't necessarily everywhere is because the occasional Tesla driver, doesn't go anywhere to charge. And if so, then it's just small battery and just occasional. So the incentives are just not aligned. But if I have a lot of trucks with big batteries charging at particular locations daily, everybody's going to build me a charging location where I need them, essentially.
That's really interesting because Elon Musk, I think he finished the charging network in Germany 2013. So he was a 10-year-old startup. He built them themselves, but you're relying on partners, but you're generating a business model around the charging stations for your partners to make sure that there are enough charging stations.
Correct. We want to make sure that it's profitable to develop a charging location for us, and then it works.
Yeah, I think it's a very interesting aspect. you're not generating a profitable business model for yourself, but also for your partners in order to have a profitable business model for yourself. And that's, of course, not so capital intensive than building the stations yourself. I think it's extremely interesting point. And you can generalize that on complementary products that you need for any business, for partnerships in any business. You have to make sure that your partner makes money in order to be a long-term sustainable partner. So I think another aspect, and you mentioned that, and I think it's really worth dwelling on that, you're using AI a lot to build the company. So, and I think that's it's new to the way maybe also you use it. Can you show us how you do it? I mean, what are exactly doing? What are the impact? How do you learn about AI? Because most of the things are new, the models. So what's the story?
Yeah, so I think it's a huge privilege to build a company today compared to how it was 10 years ago. So the go-to, problem solving 10 years ago or even 5 or whatever is like, okay, I need more engineers. I need a product person and a designer that tell the engineers to do what, how does this work? It's just so much friction, right? And as a founder, you get really stressed out because it's all too slow. So now the prototype is done. You do it yourself. So I use Cloud Code now. I consider myself now technical and a coder. I have a terminal. I do this. I can develop anything I want within, hours.
So you're the CEO, the founder of the company, and you're programming?
So I do prototyping. Mm. We do have a great technical AI engineer, but that's only one person. And this one person is managing 200 AI agents now.
The whole tech team is one person in a tech company?
Yeah, plus 200 agents.
200 agents?
Agents, like AI agents.
AI agents. How do you control them? I mean, how do you make sure? I mean, we hear stories about the agents doing nonsense.
I mean, it's an exaggeration in a way, but everything is done automatically. Yeah. Right. He has a repository with many different AI skills, and can just develop software on the spot essentially that makes sure it doesn't crash. It's backed up properly. That the agent doesn't do crazy things essentially. But the entire software development process, from design to product development to actual engineering, has become real time. I mean, in one afternoon, we built Tableau for our purpose. Wow. So Tableau is one of these, you don't need that. So we have dashboards, we have a database, we connected the dashboards to the database with our agent. So all software is available now to be built in real time, and we expect that to be done. I mean, it's just going to be better in the future.
So give us a figure. So your tech team is one person.
Yeah.
So 10 years ago, or when you set up Grover, how large would have the tech team been then?
That's a good question. So we developed a software called NexOS, and you can check it out on nexdash.com. There's a demo version of it. So it's AI smart routing for EV trucks, taking into account the weather, the elevation of the roads, and really giving you a battery state of charge expectations for the trucks. And then there's a machine learning model underneath it and so forth. It has a great design, and I mean, so many things are integrated. I think historically, it would have taken maybe 10 engineers, 15 at least, a product or 2-person, a designer, another engineer. I mean, it was just taking a lot of time, right? And then suddenly you have an organization to manage, and then you need a CTO, and then, I mean, it's just so much more efficient.
It's fewer people, and it's much faster at the same time.
Yeah, and it's direct.
So the money you save by having a smaller team, do you spend the money on something else, or do you just raise less money? Do you need less money?
Yeah, that's a great question, because capitalization of a startup is a competitive advantage, right? But when you fundraise, people will ask you, what do you need the money for? So you don't want to raise too much money, but essentially you want to be well capitalized, because just in case, somebody else comes. But you would typically, spend it on sales, have a higher risk tolerance, and raise a lot less money, and be a lot faster as well.
So you mentioned you use the AI for the tech stack. Do you use it for something else, like for controlling?
For all administrative things.
Everything?
Admin stuff.
Admin,
like everything that is like, I need to learn more about this particular company. Here are the materials, whatever you pointed at the folder, give me a 1-page summary. So everything that has been operations or administration, Everything can be done by AI. Everything is essentially done in real time, and everybody has to learn using it, kind of as a first step now.
And it's amazing because obviously this is just starting. I mean, you are one of the first companies, I guess, who have that AI-based approach. How do you stay on track? I mean, how do you stay on track? What's happening in the AI world? Is that a big part of your job to understand what's happening?
Yeah. So look, I think part of the things that if software becomes easier to develop, the input becomes the ideas, but also the actual data. So that's why we call it vertical AI, where we actually also have the trucks, on the operation, the real routes, and all of these things. Software alone is probably not good enough. How to stay up to date? Well, it's all on X and Twitter. Essentially, you want to follow the real people, and then you want to test it out, try it out, and look for it for yourselves. But if you want to have real-time information about that, you should use Twitter.
Trucking is an industry with like strong incumbents like Fiege, DHL, Schenker. I mean, are they moving towards the AI space in the way you are doing, or do you feel you have a somewhat sustainable competitive advantage compared to them because they're maybe too slow and don't understand what they can do with AI?
Yeah, so I think the biggest learning was also to find out that these big companies actually use the smaller companies to fulfill the job. They don't have so many, own trucks. So even if they were to, start, with more own trucks, they would start essentially where we are starting. Our COO is from DB Schenker, so we have direct insight. He used to be used to be a senior level, C-level executive at DB Schenker there. So we have that transportation, logistics know-how in the company too. But they actually don't execute the jobs themselves. So
DB Schenker you could be a partner with DB
Could be a partner, yeah.
Or not necessarily.
We'll see. Look, I think at the end of the day, 95% of companies are really small. The market is now consolidating, right? Because capital is entering the space. The EV trucks are expensive. There has to be more capital, there has to be more charging, there has to be more software. And then ultimately, this will be a infrastructure play where, trucks are autonomous. The entire reason for the industry to be fragmented, like you have the one-person trucker or so, is disappearing over time. So it's going to be a more concentrated industry.
Yeah. So it's really fascinating what you're doing. I mean, you're consolidating industry, you're generating business models for your EV charging partners, you're courageous into the EV trucking space, and you're using AI to build a company. So I mean, you're collecting great people from Grover, from Schenker, somewhere else. So I think it's a really interesting puzzle that you're completing to create a very, very strong, successful company. So we have a few minutes left. Are there any questions from the audience? Anyone wants to ask a question? Yeah, go ahead.
Hi, Sebastian. I have a question looking more at the early stage of a startup. So I really get what you said, that we as well initially spend a lot of time and money and cost effectively on building software. Now with AI that changed, you can develop a early stage app over a weekend, basically. But in my thinking is there's a million ideas. Startups are not about ideas, but about people getting their ass up and do something, be brave and start something. And now the cost of trying this has gone down with AI being available. What do you think? What's the impact on the startup ecosystem if those barriers get lower to try something? What is the edge that makes startups special? If software isn't special anymore because anybody could do it, what is it that really is the edge to startups?
Yeah, that's a very good question. I think there are two edges. If software is ubiquitous, right, then distribution and retention is key, right? Because you want to maintain the relationship with your customer, you want to acquire the customer. Proprietary data is key. So what kind of data do I have that others don't have? Well, I actually need to operate the trucks to get these data points. So you have to go, above and beyond the software development. Into customer acquisition, distribution, customer retention, and so forth. And I think also that's where the tenacity then comes in, right? Because everybody can build software, but, and then what? So I think the similar success factors will prevail. It's just a lot easier and faster for the ones that would have succeeded probably anyway, to get where they need to be.
I guess keep up the pace. I mean, you're ahead, and then you have to stay ahead all the time. So it's getting faster and faster all the time. What else? More questions? Then I have maybe one final question regarding your investors. You do need investors when you build a capital-intensive startup. Any do's and don'ts and learnings around, for a founder, how to handle VCs? Have you any recommendations for the founders here, or maybe for the investors in the room? From your experience.
Yeah, I think since software development is now like one person job plus Claude essentially, and you don't need 200 people teams for that, you can be super selective about your investors. I mean, you want to have you want to be well capitalized, but you know that you can get very far with very little capital. So I think selectivity, you have to be super selective. And pick your investors wisely. I mean, these people are ultimately your advocates. They need to go out and advocate for the company. Yeah. I mean, investors are like people as well. Just make sure they are ultimately aligned with you, like with the incentives, and that you have good advocates on board.
So, if you have a range of investors to choose from, which one would you pick? I mean, what criteria are you looking at exactly in the company? Do you pick the one who offers you the most money, or what investor would you pick?
Well, I would pick for vision alignment, number one, right? Do people see the same vision that I see as the founder? Are they joining the same journey, or do they have something else in mind? Like, how do you see the company developing? I think that's the most important part. Right? If you're building, I don't know, ultimately at Grover, for instance, we were building a neobank, but some Series C investors didn't know that essentially, So you want to make sure there's ultimate alignment, and yeah, sure. The second thing is a good brand helps. Hiring helps with subsequent fundraisings, and the third thing is definitely the mindset.
Mindset help. Any help that you would expect from an investor, like value add support? What would you expect from an investor, or should they leave you alone because you do your own thing and they shouldn't disturb you?
I think a good investor encourages you to do bold things, rather than being naggy. Yeah, because it's a journey. I mean, it's you really want to tackle a big industry. It's gonna be tough. You have to do big, bold things essentially. So if investors that are on the road with that, then you have a good investor on board.
Thanks, Michael. I mean, I really admire your journey. I mean, studying law and economics at the same time, Goldman Sachs, which is unachievable for everyone except very few people. And then two tough startups that you founded with a huge set of learnings, AI, building ecosystems, profitable business models for the partners, M&A roll-up, acquiring good people. I think it's a great recipe for success that we can learn from. Big round of applause for Michael, and thank you very much.
Thank you. Thanks a lot.
So we hand back over to...
Thank you so much. I can only agree with Alex here. Fantastic session, a lot of learnings. We will continue after quite a long lunch break, actually, which I think is great. We had the topic of networking, so please do play that networking game. Never eat lunch alone. Enjoy the break, and then we will be back. And I really want to put my finger on this session with the topic of mental health. Of also one of very successful founders in this ecosystem who's talking very openly about the dark sides of success. So yeah, I think really a session worth listening to. So see you in a little bit, and thank you so much for being with us.